Eryka, let's talk today about what is on everyone's mind, everyone's lips, and that is the markets and soaring inflation. What insights do you have for us today on that?
Well, today is very interesting because the Fed has just delivered the biggest interest rate hike in decades to combat surging inflation. They raised it by 3/4 of a percentage point, which is the biggest hike since 1994. And that's following them raising it a 1/4 point in March and a 1/2 point in May. So you're seeing not just Bitcoin markets, but markets all across the world trying to figure out what's up with just the economy in general. When you look at the crypto markets, I mean, it's interesting because you have seen in crypto, in Bitcoin specifically, 80% drops before. This is nothing new. But what you are seeing is that, since the start of coronavirus, which is really when this insane printing and calamity started, Bitcoin is holding up a lot better and has returned better since the beginning of 2020. So this is a Twitter page that I follow documenting Bitcoin. And this is a report from Fidelity, which we talked about last week, just started offering Ethereum. If you look at the beginning of 2020, you just see that over time, Bitcoin, the S&P 500, the SPACs, non-profitable tech, you see Bitcoin has returned much more, even more than Bitcoin sensitive, which to me is companies that have Bitcoin on their balance sheet. So it's just pretty interesting that, it's still one of the best performing assets during these strange times. And I think that the reason why you see that is because I always say this, people come for the Lambo and they stay for the revolution. So you have an entire generation of young people that did not know that there were issues with the financial system until they got into Bitcoin. And they got into Bitcoin because they saw the potential for price appreciation. They saw the potential to make money. And then what happened was they realized, oh, what is the Federal Reserve? Why is it that there is this one entity that controls our money that is not even really a US entity? And so a lot of people stay, and there's this term in crypto called HODL, HODL, which means you just hold, right? So you see a lot of Bitcoiners who are just not going to sell. And I think that that's a lot different. That loyalty to the brand, that loyalty to Bitcoin is a lot different than what you see in other markets. And I think that, another reason why you're seeing Bitcoin do well in comparison to other assets is that, percentage wise, the percentage of Bitcoin dropping is much bigger than that of gold or the S&P 500. But when you look at the market caps of these assets, I think Bitcoin is at, let's say, $600 billion today, right? $600 billion is less than Apple alone. It's it's a fraction of what Apple alone is. So when you see that percentage, it's just because that dollar value change for that large percentage to occur is much smaller of a number. So $700 million change in Bitcoin will reflect in a bigger percentage than a $700 million change in Apple. And it's just because of market cap, right? So in my opinion, what's going to happen with cryptocurrency and the rest of the markets is that you're seeing everybody tighten their belts, per se. There is food shortages that are happening. The price of food, the price of gas is exponentially rising. And sometimes what goes first in a person's portfolio in order to have preservation, self-preservation, are going to be what they would consider as fringe assets. And to some people, a fringe asset is a stock. So to some people, a fringe asset is Bitcoin. But to those who really, really believe in this cause of Bitcoin, they are not going to sell because they view Bitcoin as a way for ultimate wealth preservation. So when you look at the reason why Bitcoin is dropping so dramatically right now, because we would assume that the opposite would happen, that people would see that there's inflation, there's interest rate hikes, there's so many issues going on in the traditional market. It's a good idea to move to Bitcoin. But I think the reason why you're not seeing that happen is because Wall Street is involved in crypto. And when the big players are involved, you're going to see them really wash out the weak hands in this market. I mean, you're seeing things like UST Luna. So that big debacle where UST, an algorithmic stablecoin, lost this peg that we talked about. That was really the first, I would say, that the straw that broke the camel's back. And then we see the other day, Celsius Network So Celsius is a C5 platform. They offer loans, and they also offer high yields, let's say 4 to 8% on crypto that you have deposited with them. They lost a lot of money because of the Luna crash, and now they are not returning the funds of their depositors. They've just kind of paused everything because if they don't pause everything, then they can't handle it, and it's not going to be good for everyone. So they're trying to make a good decision by pausing the depositors' funds, but there have been a lot of rumblings about Celsius going under for a while. So this is not something that's like comes too much as a surprise to people. I personally warn people, take your money off Celsius, take your money off central exchanges, just because there's going to be some shakings. And then, seeing a Bitcoin price of $20,000. I try not to give price predictions too publicly, and it's easy to say now, but I definitely told people we were going to go going this low. And I think the reason why is because there are these things called CME gaps, which are literal gaps in the trading price of Bitcoin that happen because the Chicago Mercantile Exchange, which trades futures, when they go offline after 5 p.m. or they go offline because it's Friday, because they don't trade 24/7 like Bitcoin does, if they go back online and the price of Bitcoin has changed, you literally see a gap in the price. And there is a gap at about $18,000, and there is a gap a little bit lower that I won't say, but people say that all gaps fill. There's no rule that says a gap has to fill, but it kind of always happens. It's like a self-fulfilling prophecy almost. And I do think that we have to fill that gap, and I would rather fill it now. And then so that's another thing too, is just like knowing the trends that people who trade charts follow in predicting that, okay, this is going to happen. So I knew we were going to come back down to this point at some point, but it seems like the time is now. We're sitting at about $21,000. And then, because people are tightening their belts, investing, I just don't see where this big investment is going to come from for a large growth in Bitcoin anytime soon, just because people don't have that excess money to spend. If they did, they're spending it, they're saving it, or they're storing food or storing toilet paper. All that stuff is a great idea to do right now. So I can't see Bitcoin as a market, or really any other markets, grow. But I know that if you do have excess money sitting on the sidelines that you don't necessarily need, and you have your 6 months of emergency income already there, personally, gold, silver, Bitcoin, and if you have even more, I mean, right now is a really great time to build in a bear market, right? Because in cryptocurrency, what I see is when the price of crypto is down, you have a lot less jokers in the room. You have a lot less people who are just there for the pump. You really have the serious players that stick around. And I think we're going to see some amazing technology and projects grow out at this time. But right now, the markets, they are really hurting people. And all I can say is it's not just Bitcoin, it's everything. So, yeah.
That is true. It is not just Bitcoin, it is everything. However, the prepper market may be going up.
Oh, yeah. I mean,
Yeah.
I'm sure that what ECI does and with the magazine of guys showing alternative ways to be able to not be tied to these traditional systems, that is definitely something that people should be knowledgeable about and really get into.
Well, Eryka, thank you again for sharing all your insights and suggestions on what people can do and what to watch for in these very challenging, trying times.